Welcome to another video by Day Trading Forex Live. Today we're going to outline the 1, 2, 3 reversal pattern. We wrote an article about this and put a chart up as well, but I thought I would make a video to clarify any of the steps of the strategy that were left unclear in the chart as well as in the article itself. As you know, with any day trading strategy, the quicker you can identify a change in trend, the better. Oftentimes it's very difficult when you have the market trending down, trending up in a strong manner to effectively pick a bottom, pick a top. In addition to that, it's also very difficult in a given trend to find a deep enough retracement to get in with the trend. This strategy kind of simplifies things and really puts it in perspective. So you can see fundamentally when the trend is starting to stagger a bit and is going to be retracing, and in the case of getting in with the trend, when the trend is going to continue. So let's take a quick look here. You can see that the market continues to work lower, lower lows, lower highs. Obviously that is the fundamental makeup of any downtrend here. As we get to this point, the standard 1, 2, 3 retracel comes into effect. So we hit an overall bottom and we retrace against the trend. That is number one, your retracement against the trend. So as you can see, there's many number ones here. One, retracement against the trend. But what makes this unique and separates it from the rest of this, and this is the great part, is you make your second try, number two, the trend tries to continue. On the third line, the third leg up against the trend, so you have 1 against the trend, 2, the trend tries to continue. On number 3, it breaks the overall high of the first retracement against the trend. So 1 against the trend, 2, the trend tries to continue, 3 finally sets a higher high. So we're buying on a break of this higher high. Going back here, you can see there's plenty of 1 against the trend, 2, the market tries to continue, and then 3, if it would have broken the high, we would have went long. And much of the same as here as well. You know, you have 1, really no 2. And much is the same here, 1, 2, but it makes a lower low. So the definition here is 1 against the trend, 2, in the case of a downtrend, sets a higher low, as it did here. 3 sets a higher high. So now you just have your first pattern of higher highs as well as this higher low. Now let's take a look at this situation in inverse. This isn't quite as clear cut, but as you can see, it does illustrate the point very clearly. The trend went from down to up. As it did that, the market continued to work through these highs and really establish that it was a short-term uptrend. Then you have 1 against the trend, 2, the trend tries to continue, and then 3, finally it breaks this low. So now what you have is a lower high, and you sold on a break of this low, lower low. So 1 against the trend, 2, the trend tries to continue, fails, it sets a lower high, and then 3, the market sets a lower low. So we had an uptrend, and then the trend ended, obviously, when the fundamental makeup of any trend failed. In an uptrend, you need higher highs, higher lows. This failed right here. Lower high, lower low. I hope this video helps. I hope it was informative. This is something we practice every day in the trading room. If you haven't had your free trial, come check us out. It's 10 days, full access, free, no charge to you. Either way, I hope this video helped, and I hope to see you in the room.